Let's say one day you went to the shop to purchase rice, and when you asked for the price, they said it is 50 rupees per kg, and you were happy, you paid them 1000 rupees for 20 kgs of rice. But then when you actually got the rice, you noticed that it was missing 3% or it was just 19.4 kgs. What would you do? You tried to fight with the shopkeeper, but he said no, it happened due to a technical glitch. I cannot refund you the amount, nor can I give you the extra rice that was promised. Well, the story that we heard earlier was very fun to hear, but it is very sad for me to say that it was the reality for a lot of mutual fund investors on the day of market crash on Tuesday. Well, if this happens in the real world, you can fight it. There are multiple ways or avenues in front of you to file a case and to get the compensation that was required. But only in the case of the Indian stock market, where retail traders and retail investors are being looted without any explanation, then you do not have anyone to go and complain against. If that is where you are at, then this video is for you. So when the market crashed on Tuesday, a lot of bullish and intelligent buyers saw it as a good opportunity for them to buy into that dip. And they started investing into mutual funds. Generally, if you're investing into a mutual fund on a trading day, any purchase that you make before 3 p.m. directly with the mutual fund or 2:30 p.m. with the broker, that could be Zerodha, Grow or any other broker, if it happens before this cutoff time, you are liable or you should be getting the NAV, the net asset value on that particular day. So all the investors who invested before 2:30 p.m. on the day of the market crash on Tuesday should be getting the NAV value of their mutual fund as the price on Tuesday. So that's it. You agree? This is what has been specified by SEBI since their notice on 2020. It has been enacted since February 2021. I'll show the notice here as well. So it clearly states the same. But interestingly, if you put money into mutual funds on Tuesday and you were expecting that the price of Tuesday is what you will get, you would have been greeted by a congrats message. Hey, congrats on purchasing your mutual fund. No further explanation. But when you look into it further, you would see that your allotted prices for Wednesday's NAV. So Nifty crashed 6%. You wanted to catch the fall. You did everything that was mandated by SEBI. You invested before the cutoff time, but you got the price on the next day when Nifty moved back up by 3%. That's almost a 3% notional loss for you. And it is the same as a rice seller coming and telling you, sir, I've only given you 19.4 kgs instead of the 20 kgs you asked for just because, right? So that's the situation right now. That is what has happened here. So this video is basically a rant from me, trying to find out who is responsible. Nobody has accepted responsibility till now, and to see how retail investors are getting trapped. And for you, what all are the redressal mechanisms available for you? Who all or where do you need to complain so that you get your money back, or at least you try to, and what is a possibility of that actually happening and you getting your settlement? So the first question is, what really happened? How did mutual fund investors in India get failed by the financial system, right? So let's go through it. So it is clear that brokers did not cause the issue because a lot of brokers were simultaneously affected. It is kind of clear there is a deeper root cause for this problem. So let's try to investigate. BSE has confirmed that there were no technical glitches from their side, and Grow and Zerodha both have in their statements or in their responses to customers getting very frustrated, have said that there was an issue with the clearing corporation not receiving funds or not receiving confirmation of funds from the payment aggregators. And if you're looking into any other industry, imagine you are working in the finance industry, which is regulated by RBI. It is very clear and very strict that any third-party platform suffering tech glitches will be liable for their mistakes. But that is not the case when we come into the stock market. It is very sad to see that brokers, payment aggregators, and even exchanges, yes, exchanges also are getting away with the fact that there were small terms and conditions statements saying that they're not liable for any technical glitches. How does that even make sense? It is not clear to me. So what has happened here is BSE has washed their hands, the brokers have washed their hands, and nobody is claiming that it was their fault which caused this entire issue. And mind you, the first rice example was just with a small person who was buying for 1000 rupees. Now imagine how much funds would have flown on such a day when the NSE created a world record for handling the most number of transactions. I'm sure thousands of crores would have flown in from retail investors trying to buy the dip. So yes, that is what has happened, and now what has been done has been done. Now let's look at what all other redressal mechanisms in place. So the first thing that I have to tell you is, do not hope for a refund or any sort of compensation. A structural change has to happen. SEBI has to make a decision that such tech glitches will not be tolerated, and they have to bring in policies to make either the brokers, the payment aggregators, or even the exchanges liable for losses which happen in certain situations like this. But still, you need to make your voice heard. Now it is being said that at least 5% of retail traders who try to put in money into mutual funds on the day of the market crash have been affected. But I think the number is much more. So first thing that you have to do, go check if you have invested on that day. Go check what was the NAV that you received, the price of the mutual fund that you got allotted, and do make sure that this was Tuesday's price for that mutual fund, not Wednesday's. And so let's summarize. First thing, confirm that you invested before the cutoff time. The general cutoff time is 2:30 p.m. SEBI says it's 3 p.m. Some brokers even say it's 2 p.m. So first go to your broker, ask them what is their cutoff time. Confirm that you invested in the mutual fund before the broker's cutoff time. And second thing, make sure you confirm the NAV to see if you are affected. If you are not affected, all well and good for you, right? It's a happy case for you. And if you see that the wrong price has been allotted to you, you can go to SEBI at scores.sebi.gov.in. This is the official website. You can go there, file an official complaint, and you'll make sure that if there is a redressal mechanism and if you're to trust that mechanism, you will be compensated. But even otherwise, even if you're not hoping for any compensation, at least your voice will be heard. And to make sure the next time such an issue happens, at least you would get a proper explanation other than congrats, your mutual fund units have been allotted, right? At least someone will come and tell you that you've got the wrong NAV. Should you or should you not be compensated is another issue. Them not trying to make you understand, them not giving you the information, I would call it fraud, right? So the first step is to prevent fraud. The second step is to look at who is liable. And the third step is compensation. I think that's a long way away. And realistically, compensation might be a very difficult thing to implement, but there should be some sort of fines or regulations being put in to people who are having tech glitches multiple times over and over again. So yes, that's it for the video, guys. Check if you are affected. Go complain with SEBI at scores.sebi.gov.in and let me know in the comments down below if you were affected by this as well. If you know anybody who has invested into mutual funds on the Tuesday market crash day, make sure you send this video to them as well. This is Ajay Ajith signing off. See you again. Bye bye.